Hello investors, it's Zil from Equity Master bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. In today's video, I'm going to combine dividends with penny stocks and highlight some low price stocks that have been rewarding shareholders for consecutive years. You see, most people invest for their retirement because at some point of time, you'll want to stop working, but you'll still need to pay your bills. Dividend stocks can generate a lot of income over time. However, when investing in dividend stocks, it's very important to separate the wheat from the chaff. The key is to look for companies that have raised dividends and would continue to do so in the future. For a company to keep raising its dividend payouts, it must also grow its earnings steadily. And when a company's earnings and dividends go up, its stock price usually rises too. It's general understanding that companies that grow their dividends often do better than the market. Established large caps have sufficient cash flows on their balance sheet, which they could use to raise dividends and reward shareholders. But are there any penny stocks that have achieved this feat? Are there any low-priced companies that have consecutively rewarded shareholders with regular dividends? In this video, we are going to look at 6 such penny stocks that have paid regular dividends for up to 30 years. First thing first, since there's no set definition of penny stocks in India, we at Equity Master define a penny stock as a stock that's trading at a 2-digit price. In other words, a stock that is trading less than Rs 100. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. Now with that disclaimer out of our way, let's get started. First on the list is NMDC. The share price of the company is currently quoted at 65 rupees per share. NMDC is engaged in the exploration and production of iron ore along with diamonds, the production and sale of sponge iron, and the generation of sale of wind power. It was established in the year 1958 as a fully owned government company under the administrative control of the Ministry of Steel and is one of the most profitable ones among the Navratna companies. NMDC has a strong history of rewarding investors with dividends. The company started paying dividends in 1995 and it has not had a single year in between till 2024 where it did not make a payout. In FY24, the company declared a dividend of 7.25 rupees per share with a dividend payout ratio of 38.1%. In FY22, the company registered its highest dividend payout of 14.74 rupees per share with a dividend yield crossing over 9%. Coming to its financials, in FY24, the company registered its best ever yearly physical performance by producing 45 million tons of iron ore and selling 44.4 million tons. The company recorded a 10% growth in production and 16% growth in sales compared to FY23. This translated into a strong financial performance, earning a revenue of 212.9 billion rupees in FY24, which was a 21% increase from FY23. Strategic financial planning and pricing mechanisms led to a net profit of 56.3 billion rupees. The company is gearing up to deliver 50 million tons of iron ore in FY25. It's investing in capacity expansion and new infrastructure to augment production capacity to 72 million tons from existing iron ore mines, while also developing the NCL JV mines to contribute another 28 million tons. NMDC's overall massive capex is expected to enhance operational efficiency, expand production capacity, and position the company as a 100 million tons company within the next 5 to 6 years. More recently, it was announced that the Ministry of Steel is reportedly looking to merge NMDC with KIOCL. Shares of NMDC came under pressure a month ago after Karnataka government proposed to increase iron ore mining duties. Karnataka is a crucial state for NMDC, contributing nearly 35% of the company's total production. Moving on, the second stock on the list is Bharat Seeds. The share price of the company is currently quoted at 94 rupees per share. Bharat Seats is engaged in manufacturing car seats and molded floor carpets for Maruti Suzuki and two-wheeler seats for Suzuki Motorcycle India. The company derives most of its revenue from its car seat assembly division and around 5% from its motorcycle seat division. The rest comes from other divisions such as carpet sets, extrusion components for vehicle roofs, and frame components. Bharat Seats has a long history of rewarding investors with dividends. The company started paying dividends in 1998 and it has not had a single year in between till 2024 where it did not make a payout. In FY24, the company declared a dividend of 1.6 rupees per share, 0.8 rupees after adjusting for bonus, with a dividend payout ratio of 20.1%. Since the company is backed by Maruti Suzuki, the largest passenger car manufacturer in India, it enjoys steady revenue backed by consistent orders. However, the company is exposed to client concentration. Maruti holds close to 30% stake in the company. In the past 5 years, the company's sales and net profit have grown at a compounded annual growth rate of 3.4% and 3.2% respectively. In FY24, the company incurred a capex of 450 million rupees to construct buildings and machinery at its existing plants in Haryana and Gujarat. For FY25, the company has modest capex plans. It's setting up a new plant at Haryana and has plans to extend the building and additional production facilities at its Bhorakalan plant. The company is expected to pay dividend this year as well. One red flag that investors should take note of is that the Income Tax Department had searched the company's premises back in 2023, but there have been no material developments after that. Here's how the stock price has moved in the past 1 year. Third on the list is Jalandhar Motor Agency. The share price of the company is currently quoted at 95 rupees per share. Jalandhar Motor Agency is predominantly engaged in trading and distribution of automobile parts, accessories, and petroleum products primarily in India. The company has a decent track record of rewarding investors with dividends. It started paying dividends in 1998. Since 2002, the company has not had a single year in between till 2024 where it did not make a payout. In FY24, the company declared a dividend of 2 rupees per share with a dividend payout ratio of 18%. Here's a table showing Jalandhar's dividend history for the past 5 years. Coming to the financials, Jalandhar Motor Agency's net sales and net profit have grown at a CAGR of 8.5% and 10.6% in the past 5 years. The company has decent sales and profit growth track record. The company maintains a debt-free status. In the most recent September 2024 quarter, foreign investors have added some stake in the company, taking their holding up from 0.05% to 0.14%. Here's how the stock price has moved in the past 1 year. Fourth on the list is NHPC. The share price of the company is currently quoted at 78 rupees per share. NHPC supplies substantial power to utilities across eastern, northern and northeastern regions through long-term power purchase agreements. It boasts a total capacity of 7,000 megawatt, filling the gap during peak demand periods when solar power falls short. NHPC has a strong history of rewarding investors with dividends. The company started paying dividends in 2000. Since 2004, it has paid dividends consistently for 20 years. In FY24, the company declared a dividend of 1.9 rupees per share with a dividend payout ratio of 53%. As you can see in the table, the dividend yield has come down as its stock price has increased over the years. Nevertheless, in the past 5 years, the company has reported a poor revenue and net profit growth. It also has low return ratios. Moreover, the expansion plans of NHPC exposes the company to the project execution and funding related risks. This is, however, mitigated largely through the company's favorable capital structure, consistent cash flows from operations with adequate cash and bank balance, and extensive experience in implementation of various projects in the past. Looking ahead, the company has outlined a massive capex outlay for doubling the installed 7,000 megawatt capacity by financial year 2027. It has guided for a capex of 90 to 100 billion rupees for the next 10 years. The company is also shifting its focus towards the solar energy segment. Out of 10,499 megawatt capacity under construction, the company has allocated 1,135 megawatts for solar power. It has recently signed a contract to develop additional 2,000 megawatts solar power capacity in Rajasthan. Apart from that, about 9,090 megawatt solar power capacity is under tender and pipeline, including as an intermediary procurer. Here's how the stock price has moved in the past 1 year. Fifth on the list is Kamdhenu. The share price of the company is currently quoted at 44 rupees per share. Kamdhenu manufactures, markets and distributes steel and paint products. Its product lineup include TMT bars, structural steel, binding wire, color-coated sheets, plywood and paints. The company operates under a franchisee business model and has a network of over 11,500 dealers and distributors across India. Kamdhenu has a decent history of rewarding investors with dividends. The company started paying dividends in 2008, but then came the global financial crisis. After a couple of years in 2015, the company once again started paying dividends and has maintained a consistent track record since then. In FY24, the company declared a dividend of 0.2 rupees per share, adjusted for the recent split, with a dividend payout ratio of 11%. The company recently split its shares in the ratio of 1:10, wherein its share price was adjusted from 450 levels to 45 rupees at present. Coming to the financials, Kamdhenu's net sales have remained sluggish over the years. At the same time, its net profit has grown multifold. During the most recent September 2024 quarter, the company reported a marginal growth in revenue year on year, driven by increased construction activities despite regional flooding challenges. The net profit for the same period rose 56% to 116 million rupees. Looking ahead, the company aims to double its sales in the next 4 to 5 years through franchisees and in-house manufacturing. The company's management has highlighted a favorable industry environment, including government initiatives like Housing for All. While the company's paint segment is yet to see a recovery due to increased competition, the TMT business is expected to grow in double digits due to rising TMT bars demand amid government initiatives and infrastructure spending. Here's how the stock price has performed in the past 1 year. Last on the list is Ahlada Engineers. The share price of the company is currently quoted at 93 rupees per share. Ahlada Engineers is only listed on the NSE. The company manufactures steel doors and windows for the residential and commercial segment and green chalk boards, dual desks, and reverse osmosis plants for government-run schools in Andhra Pradesh. Ahlada has a decent history of rewarding investors with dividends ever since listing in September 2018. The company started paying dividends in 2019 and has consistently declared payouts for 6 years. In FY24, the company declared a dividend of 1.6 rupees per share with a dividend payout ratio of 15%. Coming to its financials, Ahlada Engineers' net sales and net profit have grown at a CAGR of 4.6% and 3.7% over the past 5 years. The company recorded a revenue of 2,595 million rupees in FY24, driven by substantial progress in executing government projects and a rise in orders from the private sector clients. It also has a long-term agreement with Tata Steel for manufacturing close to 1.2 million doors, which the company has bagged in 2018. Going by the revenue and profit figures for the first 2 quarters of FY25, the company is expected to report lower numbers this year owing to a likely delay in the execution of government orders. It has some pending receivables amount from the government. Nevertheless, Ahlada does have some sectoral growth levers in place in the form of expansion of clean room technology industry. India's clean room technology sector is undergoing a transformative shift with the rise of industries like electronics manufacturing services, semiconductors, and data centers. According to Ahlada's FY24 annual report, the company had started commercial operations in 2006 with manufacturing of clean room equipment and furniture. Here's how the stock price has moved in the past 1 year. So there you go. Here's a table summarizing the dividend payout for mentioned companies along with their valuations. When you invest in a dividend-paying company, think of it like owning a thriving coffee shop in your neighborhood. The shop already has a loyal customer base and strong profits. Here's what you'd do. Hire a reliable team to run the shop smoothly. Occasionally check in to ensure everything is on track. Use the profits to cover your expenses or reinvest as needed. That's the essence of dividend investing. The best part: you're not focused on selling the shop every time its value fluctuates. Instead, you are earning steady cash flow. So sit back, let the dividends roll in, and enjoy the financial freedom that comes with owning a piece of a successful business. All being said, buying the best dividend stocks does not mean picking the ones with the highest yields. You must do a thorough quality check of the business before buying a high dividend yield stock. Investors should also evaluate the company's fundamentals, corporate governance, and the valuation of the stocks as key factors when conducting due diligence before making investment decisions. Check out Equity Master's user-friendly and free stock screener to filter the best dividend-paying penny stocks. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. For more on this story, check out my colleague Yash Vora's article using the link provided in the description below. Happy investing!